Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Everyone checking in on the markets today. So a significant dump day around midday. We started the day consolidating and then took a significant tumble when we had news come out that really there weren't any developments with China and Trump at the talk, and there wasn't really anything of substance. Now after hours, just saw a little note, need to do further research, but kind of came out saying, yes, it was a productive dinner. So who knows? We're definitely at the whim of these tweets, news headlines. It's all about China. That's all the market is focusing on right now in the short term in terms of what we're reacting to on a day-to-day basis. But we have a very clear rejection from resistance, and in order to stay simplified and rather than getting overwhelmed with fundamentals and news releases and media and all this, it's just watching this tightening range. So obviously a high bear volume pullback. We're going to be looking for a higher low to form compared to 263.07 and to stay in this tightening range. We obviously had a significantly bearish day, and we're going to be watching after the closed market day tomorrow, Thursday, do we get any kind of progress in terms of something substantial with China and the US? And at this point, I'm pretty confident that this triple top on the daily at 280 to 281 is not going to break without the actual signing of a deal. And that's something to keep an eye on. But if we do not break these resistance levels, we're watching the weekly equilibrium. Triple top, we have our low of the dump, high of the bounce, higher low, lower high. The financial sector, which we will get to, has already broken this weekly higher low pattern. So that's a potential early indication that we might see a bear break in the market as well. That's something that we have to factor in terms of what is the most likely scenario. That key support level, again, 263.07 is the must-hold level, but it's looking like we're going to trade within this tightening pattern probably into the middle of the month. And then we'll be looking for the break to indicate where momentum is heading as we head into 2019. Again, the monthly time frame for SPY, which we've been pointing out for about 5 or 6 weeks at this point, that we're watching for the potential of a bearish reversal head and shoulders pattern as the indication that the market is going to enter a recession or a downtrend or whatever you want to call it. And we have the left shoulder, the head. This would be the right shoulder, and if we fade back down and break the October low, we're likely going to break the February low as well. That will be a very significant shift in this market if that pattern does end up playing out, and how this weekly pattern breaks is going to dictate whether that follows through or not. IWM on the daily chart, also a huge dump, looking back down at the low, 145.59, 144.70. So we got our low of the dump, high of the bounce, higher low, lower high. If we break these support levels, it's only going to increase the odds that SPY is going to break bearish, just like what happened with the financial sector. QQQ in the tech sector on the daily. Significant pullback as well. We are looking for a higher low compared to 157.13 and a tightening range, very clear downtrend of these lower highs. Each lower high is a weekly lower high. And on the pullback, the bulls must hold 157.13 and then turn around and break the lower high pattern by breaking 173.31 in order to change this weekly trend. If not, we're just going to be looking down at those support levels to be tested and potentially break. Financial sector, huge bear day today. So that's the weekly break of 25.93. We only broke it by 10 cents, but now we're looking down at the low of the October dump, 25.02. So the difference here is the financial sector did not pull back as much on this second leg for that higher low. So that means it was easier for the bulls to lose that support because we didn't have to pull back that far for that level to break. But like I said, it does make us aware of the potential that we are going to see SPY break bearish as well, especially if we see bearish continuation after the close at the low with all the momentum in that favor. Again, anything can happen in the next 2 days before the market opens again. So worth watching those headlines. VIX bull showed up in a huge way. TVIX, huge day today. Anything under 23.81 is just a lower high. That's the resistance level we're watching on this weekly time frame. And if we form that lower high compared to 23.81, the bulls will have to pull back, form a higher low, and then break the lower highs in order to change this trend. If we were to see that monthly pattern break and the weekly pattern on the S&P 500, we would likely see the VIX bulls see a bull move back into the upper $20 range. So that's something we're keeping an eye out for. Again, big bear volume, significant down day. The financial sector was down 4.5%. Tech sector was down over 3%. And we have to see the bulls hold these daily higher lows, as I anticipate they will, in order to see this range tighten up a little bit more. Again, at least until the middle of the month, in my opinion, before we would get a break. So that's what we're keeping an eye on. Again, hedge those positions, those long-term portfolios, those retirement funds. Better have some exposure in terms of profiting if we see that downside break, because things will shift for a notable period of time, in my opinion, if we do get those bear breaks. Again, the weekly time frame, we are seeing these moving averages curl over, and if that bear break does come, it's going to be the most bearish market we've seen in multiple years. So that's what we're going to keep an eye on, that monthly time frame, as well as the weekly, which is continuing to tighten. I appreciate you watching. We'll check back in Thursday once the markets open back up. Have a good day off.